Hey guys, it's June 11th, 2020. This is Eric with Inspired Trading. I hope you guys are having a wonderful week. It's been an up and down week for me. Got caught up in a lot of consolidation, and for that reason, I had to go in to redefine my trading plan to actually get my rules down packed. Did some entries that wasn't really characteristics of my trading style. All right, so always look to get better, guys. All right, so we're on a 4-hour chart. We're on a Canadian, US dollar Canadian pair. All right, I'm looking for a trend reversal. So if we get a nice little healthy correction to the upside and then maybe a continuation down, we did find some good support right here. Price did respect. If we look left, all right, this is a key area as well. Right here. So you see this key area right here. So let's use this. So we don't have to drag it. All right, boom. All right, this is key area. All right, price came back down. Okay, remove this. There we go. All right, so price came back to this area. I bought in this area. I've already sold. All right, so my first target was hit. Remember, we looked left. All right, I bought, look left. That was my target. All right, so that's the area of what? Structure. Price hung out. See right here? This is all across the structure. All right, we want to try to keep our charts clean, crisp. And if you're watching this, I do offer consultation, one-on-one to help you guys. I know some ask me, "What am I going to do a course or anything?" I haven't really decided. Sometimes working one-on-one is much better. It's intimate. You can ask questions. You can get deep into it. All right. Sometimes the course just feel like there's no soul to it. Okay. So here we go. That structure. All right. What's another area of structure that we want to look to break? We really want to break this. So we can say this is structure. We do need to break it. So it is a level. All right. So instead of we're just gonna put no, we're not gonna do that. We're gonna put a resistance or support. I mean a resistance line. All right, we need to break this. All right, but we can come up and we can test this. So we can have this as another area that we can look into. All right, to take profits. All right, but ultimately we want to break this. If we break it, we make it come back and test it. But we want to break it, and we want to go shoot for what? This level of what? Structure. All right, so we got this level structure. Boom. All right. So this was what target 1 for me. This could be target 2 if you want to take profit here. All right, and then we got another take profit 3. All right, and then we want to go to what? Structure up here. We have to break this area first, and then we can look for this structure. Okay, so these are potential zones where price possibly could come back to, but we can just bring this all right here. All right, let's pull up our Fibonacci tool. We're going to swing high to low. And if you see, these levels that we're at are in key areas of where we love our fills. 61 is a key area. 78 is too. So price can come back up here and test this area and then have a nice little drop. All right. See this main structure right here? This is what, the 50%. Price could come up into this area. All right. And then we got this 38. And price could come into this area as well too. Okay. But these are zones. So don't get fixated with the lines to say, hey, it has to come here. Yeah, it can be within a zone, okay, as long as within a zone. All right. And you can adjust them as you can. Like for instance, you wanna. Some people do this, and they just take it directly, and they do like that. All right. So it's 23%. We haven't quite reached it yet, but it's the next quick target, maybe. All right. Let's go to. So these are potential for US dollar, Canadian dollar on a 4 hour. All right. Make sure your stop losses are set. Risk management. Before you take any trade, always consider how much you're willing to lose. Define that risk. Right, here we go. We're on a 4 hour. We have a head and shoulders pattern. All right, got left shoulder, head, right shoulder. We broke this neckline. Now we're headed down. We're heading down to our targets to the downside. Let's go on a bigger screen. Boom. What do we have? This is the structure. We look left. This is structure, but it's also the measurement of this head down to here. So this is where we expect price to go. All right. Be careful with this trade. Only reason you have to respect this neckline. On some occasions, price will reverse and come back up here and wipe out who? The shorts. Everybody who knows how to trade knows that this is a head and shoulders pattern. All right. Everybody is jumped in. If you have too many bears in the market, how are you going to pay the bears if it reaches target? Well, first you need to what? You need to shake the bears out of their positions by taking what? The market long. If you take the market long, what happens is you start having people set their orders, and their stop losses are going to be up in this area because they're going long. So if you're going long, your stop loss is going to be here. So if they turn the market around and they get enough people to go long, they get them long, and then they get a consensus that, hey, it's turnaround's going long, long, long. Then what happens to the bears? The bears, their stop losses are probably up here as well too. They start jumping out of their positions because they either want to lock in the profit that they have, or they don't like that it's about to do a reversal, and then they say to themselves, I'm out. All right. So, but those are premiums. When they're getting out or their stop losses are getting hit, the market's collecting all those premiums. Okay. The discount, the wholesale is up here. This is the discount. If you got in up here, you're discounted. You don't care about all this now. You're out of it. But as soon as this neckline is broken, it's not saying it's just a risk-free. Yes, we did get a nice little push. All right. And now we have a little bit of trouble right here. This trouble, this stop is because there was too many people that jumped on the bandwagon to ride it short. So they have to figure something out. All right. It may come back up here. It may not. I may be totally wrong, or it may just keep going. But that's just something to keep in mind. I'm not putting any fear in you and saying, hey, well, I was going to trade this, but now I don't know. No, what I'm saying is that just be mindful that price could come back in this area. And if price does come back in this area, and if you decide to take the trade in this area, the question will remain, will this blow your account? Would this mess you up? If the answer is no, then you're fine. Because going back to that area, that's 132 pips. So keep that in mind. Even if you had a dollar lot size, you're down 130 something dollars. All right. So keep that in mind. But that's some analysis for GJ to at least come to this area. if we break this market structure, and then we're going to come down and test this structure right here. All right, so these are the key levels that we need to be mindful of. Let's go look at US dollar, Japanese yen. I'm doing all this analysis today on the 4-hour charts. All right, so we got a nice bearish move coming down. Let's zoom out and see what we have. Okay. So what I'm seeing is another V shape move. This V shape. It looked like it could have did an inverted head and shoulders, but this it's too long out here. But this, guys, is to me is a pennant, a potential pennant to the downside. It's weird. And that's what I was telling somebody. This is one of these weird ones. Somebody can argue that this could be a. Let me do something. Let me move this out of the way. I want y'all to see this. So look at this as a pole. All right, and then let's do this instead. Somebody could argue that this may be a bullish pennant, because in a pennant, price normally like moves like sideways, like it says in a channel, consolidated channel. All right, so if you look at this channel that it's in, this thing could go to the upside. All right, let me use that one. This thing could go to the upside. Pole, pennant, boom. That could happen. But here's the weird thing about this. It's like mixed. This could be considered a bullish pennant. Just flying out here, just staying in this little zone, and we can look to get a break to the downside. All right. Let's go ahead and let's see what this extension will look like if we did break. Do the same thing we did yesterday. Yeah. This could be a potential target to the downside. All right. Keep an eye out. Price maybe come down and test this area. So it's like, so if you notice, it's not really making strong decisions. Like it's indecisive, right? You got look at this key point right here. Price broke this area. If you're thinking that, oh, okay, now we're long, but then it decide, oh no, we're gonna go back down. All right. Price was down here, and it stayed within the range. So you're just trading within the range. So more than likely, we're going to come back down and test this area. And we need to see what's going to happen. If we break it, then we come down and hit this box down here. All right. And then we make a move up. Let's see what the field levels look like based on that. All right, it's cool. So this box will come down to the 61%. So yeah, so even though it looked weird, like it was going to the upside, I think we have enough confluence here to say that we look like we're going to come to this box. We got the 61%. It's fine. It's a little bit of confluence. All right, the retracement of this main level is 61%, and the extension of this impulse down is 61%. So with that being said, that is a high probability. I'm not going to say a high probability, but it's a better chance that we look to come to this box. All right. Only issue is this is sometimes you have trouble getting to the box. All right, look. You see this, you see this. All right, take trade short. All right, boom. We break lower. We think we're gonna get there. We didn't get there. Then we break up to the upside. All right, you enter right here, but now you're a little bit down, and now you're back up. See that yo-yo effect? All right, it's toying with you, but ultimately, it want to come here. This is why sometimes swing trading can be a very, 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 very psychological nightmare for people. It's because of that right there. Prices is never just gonna just drop. All right. Okay, it dropped right here. You like, oh, okay, that's what ideally we want, but then reality sets in, and it does this. All right. But we have multiple trading opportunities within these levels once we understand them. All right. If we're looking for shorting opportunities down here, what do? We look left. That's what we want to trade to. All right. We want to trade here. We'll look for break. Boom. This would have been money for someone. What? Structure. All right. Maybe you enter right here, coming down. Look at that. So 170 pips. So you do see opportunities. All right. So don't think that you have to be one of these people that does the ultimate swing where you're entering short and you're just holding it, hoping it gets down here. All right. You're leaving a lot of money on the table because you know a yo-yo effect. You're in a yo-yo effect, and now you're down. All right. And this is a lot to wait for this to happen. So this is over here in April. All right. And then you'll be down. What is this? You would have been down by June. And then now you'll be back up again by June 11th. But once again, the psychology behind that. Who wants to see that? Who wants to see that they're up hundreds, maybe thousands of dollars, and then now they're down maybe a few hundred or 1,000? So that's why use these zones to make your profits. All right. Let's zoom in so you can see more, as if I was taking one of these trades. Let's say I was back here. All right. See, we got a red candle, a green, and then we had a what? An engulfing or a bar elimination. This what? Engulfed. So when it engulfed, where's the target? Look left. Boom. Target. Boom. It's the 4-hour chart. This is your target. Bam. How many pips? You enter right here because it broke. Boom. See that? 62 something pips. All right. So you can make money still trading without it actually going down to its targets immediately, instead of you just getting up here and you just holding. But let's see how many pips it is if you just did hold all the way down to here, about 400 and something odd pips. The problem, once again, is you're going to be in a yo-yo effect to get that, where you can make multiple trading opportunities within the move. All right, you can capitalize off of it. Look at this. This whole entire move engulfed this entire thing. What would have been the targets as soon as you saw this engulf? What's the targets? Net area of what? Structure. That can be considered area of structure. That is too. Naked charts. Don't make it simple. I mean, sorry. Make it simple. Don't make it difficult. Boom. Targets hit. If you had took this short. All right. Yes, you can use other indicators that can help you and everything, but at the end of the day, it's all about market structure. All right. So that's the CAD. We gotta break this area to get down in here. All right. If we don't break this area, we get a trend reversal. What I would look for is if price gets down here, I'm gonna turn around. I'm gonna look and see if we want to go back and retest some of this structure going back to the upside. But in the meantime, it has to break. If it doesn't break this, then we're stuck in this channel. And we can keep going. Let's do Euro USD. All right, cool. I had a green zone up here. It's an old template, so I could put a new box up here. I expect the price to come into this area based on an old analysis. All right, we got a potential, yeah. It's like a little flag is forming to go to the upside. All right. So we're on the 4-hour chart and we're trending up fairly well. Yeah, we're trending up fairly well. So that's pretty good. All right. See something. All right, cool. So we're right here. We need to break this. We break this. This is the structure I had. So we may come up and form a double top, or this could be a nice little drop for a reversal. Nevertheless, just need to keep an eye. There's nothing for me to buy right now. I mean, it could be some opportunities to gain some pips. I mean, you may get another 40, 50 pips. I guess that's good. But it's not doing anything significant for me to do anything right now, unless this green candle engulfs this red candle. But once again, you still got this level right here that you have to face. So this risk reward is really not all that great when you think about it. If it engulfs and it goes up, I mean, man, that's 17, 19 pips. That's not really worth to take this particular trade. But clearly you see we are in a channel. Let me get rid of this one. So this, all right, got to break above this. Any major rejection to the downside, we got to be careful. Let's say we did break a red candle, eliminates this green. This will be the next level of structure that it could possibly go to. All right, so we look from here to here. All right, that's 86 pips. All right, so I know people will be like, well, it's bullish. Yes, it is. But if it breaks here, I possibly would consider trading it to here, which would be a key level of structure. Why? Yeah, you got price right here, but remember, look left. Sometimes a candle can block your view, but these candles over here is representing some structure, all right? So I can drag it from here all the way across. And that's the key level of structure, and it's 86 pips. So if this breaks, we can take it here. I'm not too concerned about this upside movement. I would rather see something come to the downside. So because I don't think the reward is that great up here with price sitting where it's at previous over here. All right, so like I said, we want to look for some opportunities for this to come back down. Let's see what we have. Let's say price does come back up to this area, and then we do have a descent down to support 750 pips, or at least to this point, it's 464. So I see some shorting opportunities on this way for euro. So I wouldn't be looking for buying opportunities. I would be looking for shorting. So that's what I would be in the market for, because I see a lot of downside potential. I even can swing it low to high. I can do this from right here. I can even swing it from way over here if I want it. Boom. See what's happening. What do you have to the downside? So remember that first zone. Remember I told you break. It's going to come here. This is confluence. Look at this. It's lining up perfectly. And we got the what? We got the 23%. All this is on 23. Boom. Target. If it breaks here, yes, we have to we have to mess with this one. But if it breaks, come down, then we got the 38%. All right. Break 50. Break 61. All right. This whole entire move is a retracement back down to this area. Right? If it comes back to the 78, that means this whole entire move retraced 78% back. So these are all opportunities I like for a shorting opportunity when it comes to the euro, USD, all right, EU. Cool. All right. Let's go back. Let's look at CAD JPY. Let's look at this. All right. Head and shoulders. Boom. Perfect. There we go. Head and shoulders pattern. Head, left, right. Break, neckline. Measure. Boom. Area reset of structure. Price looks to head there. Be careful of what? Retest. Retest, then bounce. You gotta monitor this. All right. So far, great trade though. Whoever took this breakout on it. So that's good. Let's see how many pips that'd be up on this breakout. 116, not bad. I would probably start securing profits if I was in this trade, just in case I get a pullback. And I tell myself, I take profit here. If it pull back, I add, take it down. But I wouldn't be too greedy. I mean, you can go to this, but let's just see if we get a pullback. So this is already broken out for me. I'm gonna see if price does come back. If it does, I look to add. So that's CJ. The euro, JPY. A lot of head and shoulders on these charts. It's not as pretty one, but clearly you can see. Left shoulder, right shoulder, like it's trying to break. So this is a key zone. We want to see broken. All right. Stubborn one has to break. If it breaks, I will look to trade it to here first. It's my first area because it's a structure. How many pips this could be? Not bad, 140 something. I like this one. It's by far probably one of the ones I like the most because it hasn't really moved yet. So let's look for a break. If we get a break, I like to short this down. All right, let's see what this impulse move measurements would be. Boom, right in here. So yeah, fall right in. I like the confluence with it. So I like this trade. If the yen can break, this will be the target. Set your stop loss above right here. All right, boom. The euro. I didn't do odd JPY. I never really traded this pair. Good lord, everything is like in the head and shoulders. I've never seen this many. Good gracious. This is it's weird today, right? Boom. You see the breakouts. Lord, if we would have seen these hours ago, we all would have been eating. We possibly could have just retired for the rest of the year. We'll put everything in on these. Get ahead. Left. Right. Oh, yeah. All right, guys. Yeah. Um, let's see. AJ. Oh, let's do gold. I see potential inverted head and shoulders. It's a little choppy though. It's really not. I mean, like right here, you got a left shoulder, a little bit of right shoulder, and then you got a breakout of this neckline. I mean, like this is already played out. So from right here, so you see left, a little bit of the right, and then you got a breakout, and then you get the measurement. So, and if you look left, it's just level extra. That's just structure. So, like gold will at least go back up here and test that structure over there. Right here, it's the ultimate one. But right now, you gotta face this. It has to break this area. It's going to higher. All right, so look, we may come up to a double top and make it a push down, but it needs to break this area. Then it need to break that area, and then it comes up. So this is it's a lot going on right here. It's already retested. Yeah, so we had key level of resistance. Need to break those. All right, last ones. Look at Bitcoin, BTC, USD, USD. I guess we'll go with it's down. Everything is on a 4-hour today, guys. 4-hour chart. Just doing analysis on this. All right, like a bear flag forming right here. Remember, with a flag pattern, it actually looked like it's trending up, but it's really doing the opposite. Same thing with a bull flag. Flag pattern looks like it's actually dropping in price, but it's actually gaining momentum to go higher. So that's somewhat what we're seeing right here. You got a nice little drop, and then like you got an uptrend, right? Well, it looks like, oh, we're going to the next, we're going up. No, this is a classic flat pattern. Going up, pole. Let me see if I can look. Boom. Price could come back down in this area. Let me see something. You can do it as a pair flat pattern. See right here. See how it's like it's trending up. So it's like it's trending up a little bit, and then we get the break. All right, that's see what we're doing here, trending up. Then we may get a break. All right, but with all things, it's not concrete. Anything can happen. All I know is for Bitcoin, this 4,500 area is a key level. This is a key level. If we don't break that, if we stay below here, we run the risk of coming even lower. All right. And here's what you need to consider. We had this continuous higher highs, higher lows going up. All right. We're still within a channel. There's nothing to say that we're being within this channel. I didn't mean to do that. There's nothing saying that being within this channel that we can't see a move back down to this area. All right. That can happen. Regardless, we're in the channel. But being in this channel does not help if you're not down lower into the channel. The reason why I say this is because people know that the accumulation phase, there should be really no accumulating right in this area, because you're paying something premium when you can buy more in this area. So if I'm thinking that, I'm thinking that the bit boys probably know the same thing too. They want to see price come down, so what, they can accumulate more, all right? Especially when it comes to the altcoins, you'll be able to accumulate more at a cheaper price instead of trying to buy up here at a more premium price. Get down here, buy, all right, and then push the market higher. But for right now, yeah, this is a lot of space now. If we don't get above here and close and have a strong support system up here, you can kiss all this right now. For right now, goodbye. You got to deal with all this. Let's see some areas that we could, and we'll close out. We got 38% area at 7,962. We got 61 at 6,381. This right here, by far, to me, would be the best area to look at possibly now starting to accumulate and build a position. This would be lovely too, but I would put a little bit more up in this area. And if it does drop, you may can add in some little knickknacks here and there. Find some altcoins that's got a pretty good discount. You can start adding a position. If it gets here, that's when you call everybody that's for you, and you say, we got to get in. We got to add. We got to do something. We got to throw the couch on top of his head and get every coin that we got inside that couch. We got to throw it in the market. If this level is visited again. Some people say it never will. It's not true. You have to respect this. All right. We're in a channel. Before the coronavirus hit, we were in a channel. Nobody thought that it would come here. And look where we at. All right. This is April 2019 to March 2020. It took a year, but it did. All right. You got to respect these charts. You got to respect it. There's nothing saying that this thing can come up here, test this thing, and then another descent down for a whole another year. You never know. Doing this. Finally, this. And then on. We never know. All right. So respect it. All right. Check out that pattern I was telling you about. And trade your plan. All right. So you have a great one. Remember to, if you want to reach out to me on Facebook or Inspired Trading Group, or you can shoot me an email on YouTube as well. If you want to do some one-on-ones with me, I do have maybe 1 or 2 slots available still, but I am going towards capacity with that. So just let me know. Reach out to me, and I put some email links into in the description as well too. All right, y'all have a great one. Trade safe. Stay safe out here. Stick to your plan. All right. Have a great one now.